Welcome to our daily Forex market analysis, and this is for trading on March the 17th, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start off by taking a look at our calendar here. So overall in the market, some of the things that we have seen recently, one is that Fed did a surprise cut on Sunday. So before the markets really got going, we had, or actually before they even opened, we saw Fed come out and cut the interest rate by 1%. So they're essentially at 0% now. And we have also seen a lot of closures, school closures around the world. A lot of countries are shutting down or closing off their borders, especially in Europe. We are seeing more of the social distancing, which is also happening in the US and Canada, but also we are seeing more quarantine measures that are being taken that are actually being imposed on the people as opposed to just a voluntary one. In terms of overall markets, we saw that the equity markets, the stock market dropped a lot today. Dow Jones dropped nearly 3,000 points, which it hasn't done. I think it was once it did that before. So the trading had to be halted. Actually, futures trading had to be halted even before the Monday market opened on Sunday. The futures dropped so quickly after the Fed announcement of interest rate cut that they had to put a stop to that. So futures trading was closed till the market opened in the New York time, and then even then, because it dropped so quickly, trading had to be halted a couple of times. So overall, there is a lot of back and forth in the markets here. So we have to be really careful, especially the stock markets here are going back and forth. So in terms of the data that's coming up here, we have German ZEW economic sentiment numbers. It is expected to be negative here. From the positive number, it's expected to drop quite a bit, but if it's even more negative than this number that's expected, we're likely to see euro drop. And before that, we have average earnings index as well as the employment numbers out of UK. UK is really struggling with the coronavirus as well, and at this point, we'll see they are taking both fiscal policy as well as monetary policy action in order to support the economy there. So we'll see how this goes. But right now, if the numbers are below expectations, that's basically how things will be. Right now, the numbers are not, or the data that's coming out is not as important. More focus is on market sentiment and how everybody's feeling. So that's what we'll have to still keep in mind. We do, there's the EU Economic Summit, so any comments that come out of this economic summit will be important because they can move the market. In the US, we have retail and core retail sales numbers. Again, these are previous numbers, so as we'll continue on in the year, these numbers are expected to get worse. So at this point, if we see them below expectations, we could see US drop, but there have been a lot of flows into the US dollar because US dollar is a safe haven currency, so it has gone up. And aside from that, we do have a bunch of US data coming out. And as the data come out, we'll have to see. But overall, like I said, the market will be driven by sentiment more so by the data that is coming out right now. All right, so let's go on to our charts here. We'll start off with euro dollar. So we see that euro dollar has been trading in this range here for the last 2-3 days. We saw that today price went to test the high, but it stayed below that. So right now, I'm expecting price to drop essentially towards 1.1050 here, looking for it to drop. And the bias here is more neutral to bearish at this point. Euro has been benefiting from unwinding of the carry trade, which means a lot of people had borrowed money in euros because of the low interest rate, and they had invested in the US dollars or in the US markets. Now that that is unfolding, so people are moving money back into the euro, which is causing euro to be bought. As a result, it has gone up. It has done fairly well compared to other currencies against the US dollar. But now with the widespread issues in the Eurozone, I would expect it to drop. So there shouldn't be too much demand for euros because of that. Usually there's a negative impact from anything like this. So I'm looking for it to drop towards 1.1050. Pound dollar here, this one has just dropped quite a bit here. We have seen a big move to the downside. Today, we see that price has come into our support level here. And right now, the bias is still a little bit to the downside, but we could see things reverse now. So far, we've been seeing pound dropping and euro has held steady, but we could see things reverse now, and we could see pound go up. So here, what I'm looking for is a retest of the bottom here at 1.2200. And if it holds above, we could see price move back into 1.2420 and then potentially higher. So overall bias here is slightly to the downside, but overall neutral, because I think we could see a bit of a pullback here now after a huge drop. So I would keep that in mind. But should it go through the support level, there is, of course, more room to the downside, and we could see it go into 1.2020. So that's something to keep in mind. But for now, I'm looking for a sideways move here for pound dollar, so neutral bias. Aussie dollar here, this one has just been dropping. The commodity currencies have not done too well during this time. So we see a bearish candle close here for Aussie, looking for it to drop further here. And now we are into, actually, one thing we have to keep in mind here is we are into levels that we haven't seen in some time. So price is testing this 2008 lows here. And so I would be careful here in case we get a bounce, but overall bias still remains to the downside with all the problems that we have seen in regards to oil. Actually, I forgot to mention that we are still seeing the price war between Russia and Saudi Arabia. Saudi Arabia came out and said that they are going to increase production of oil, and as a result, oil is still holding to their lows right now. So oil is kind of biased to the downside, and with that, Canadian dollar has not done well, as well as Australian dollar and New Zealand dollar. Also, Chinese economy, as we expected, has not done well, and as a result of that, the numbers that came out for China, or production numbers, have been lower. And with Australia and New Zealand being such close partners, trade partners with China, we have seen both of these currencies suffer as a result of that. So overall bias here is still to the downside for Aussie dollar, but I would just watch out, because we could get pullbacks. So bias is to the downside. 0.5920 is the next target, but just watch out here. If it starts to turn, we could see a move higher, so something like that. I would watch out for that. But for now, we do have a pin bar here, so we could see a further move to the downside. So 59.20 is the target. New Zealand dollar here, this one has gone back and forth. We have seen big basically jerky moves here. Actually, another thing to keep in mind, so there have been closures for trading, and Philippines has actually closed the Forex market as well as bond trading. So just watch out, because something like that happens in other places, then we could have a problem in the Forex market. We could, be stuck in position. So that's something to be careful about. but for now, bias here is also to the downside. Next target is 0.5930 here, and then 0.5800. But as we can see here, price has bounced back and forth, so I would watch out for move to the upside here, basically pullbacks here. Now we have seen such a big drop in this, so watch out for pullbacks, but otherwise I'm looking for a further move to the downside, so something like this, a pullback into 0.6080, and if it holds below, looking for it to drop further into 0.5930 here. Dollar CAD, it has been one-way street here for dollar CAD, with oil just dropping like that, and price war still going on between Saudi Arabia and Russia. We are seeing Canadian dollar take a hit because Canada is an exporter of oil, and as a result, the currency is dependent on the price of oil and what happens. So in this case, our bias is to the upside here. I'm still looking bullish. Now with this one, we could get a pullback either into 1.3960 or even into 1.3920, and then a further move to the upside, basically something like this. Bias is still bullish here. Price has broken through this resistance, and now it's holding higher. So looking for a further move to the upside. First target here is 1.4100, then 1.4180. So bullish bias here for dollar CAD. All right, so let's move on to our commodities now. A huge drop in silver here. As we can see, price just took off to the downside. We are seeing all these issues in gold and silver here because of everything that's going on in the stock market. Generally, when stock market drops, we see move into safe haven assets. But right now, it looks like everybody is trying to come up with cash, and they're liquidating different assets in order to do that. So big drop here. Bias is still to the downside. And let's see, where are we at? Okay, so incredible drop here. This is the biggest we have seen in the last little bit, $37. So now I would look for, we are likely to get a pullback and then a further drop here. So looking for a retest of 11.50. Now we could get a bigger pullback here. So that's something we do need to keep in mind. Let's see, where are we? We are at levels we haven't seen since 2008. So it is incredible. Pull back into, no. Okay, let's see where we are. Okay, 13.17. I think this one could go higher in terms of pullback because the drop has been such big that we could see more of a pullback here, even into there. So oops, a little too big. Okay, so we can get a pullback into 13.20 or 13.80, but overall momentum is still to the downside, so bias is bearish. We could get a retest of 11.55, so that's the first target here for silver. Gold, exactly the same thing. We have seen a big drop. Again, this is from liquidation of positions because investors are essentially selling anything they can to support their accounts so that they don't get margined out of all these trades because of the stock market dropping. So with this one, still biased to the downside, we could see price just hold here and drop further, something like this, or we could see it go higher into that level, 15.1540, and then drop from there. So momentum still stays to the downside. So 36 level. So basically either this move or a bit of a deeper pullback into 1536 and then a drop here, but bias still remains to the downside for gold, and 1450 is the first target for gold here. Oil has had a really bad day here. We have seen overall prices just been dropping because of the price war that we are seeing between Russia and Saudi Arabia. So there were comments out of Saudi Arabia saying that they are going to increase production of oil. And if that happens, we are likely to see a further drop in oil. And in terms of where we are into support levels from 2015 here. So still looks bearish, but I would be cautious with this one. If they reach an agreement, or if there's an agreement reached between OPEC and Russia here, we could see this one turn around. But right now looks bearish, and the move that I would anticipate here would be potential pullback into 30.5 and then a drop. First target here is 27.50 and then 26. So we are into levels we haven't seen for a long time. Copper here, huge drop in copper as well. That's why we have seen Australian dollar take such a hit as well. With copper here, I would look for a pullback potentially into okay, so we could get a pullback into 2.37 and then a further drop here. So something like this, or a bit of a deeper pullback into 2.38 and then a drop. So overall bias here is bearish. We have seen price go through the support levels, and now I would look for a pullback and a drop. Target is 2.29 here for copper. Bitcoin, just like I said, with all these things that we would generally expect to go up, have not been doing that because investors are liquidating everything in order to basically get some funds here. So bias here still to the downside here. I would look for a retest of 3850 level here. So bearish bias for Bitcoin. All right, S&P 500 here, stock markets not doing so well. We did see that Fed cut the interest rate by 1%. So they are at essentially 0%. And then we have seen Reserve Bank of New Zealand actually cut rates, Bank of Canada cut rates on Friday. And also Fed has said that they are going to essentially support the market, and they're doing all these purchases in order to support the market. But even then, we are seeing a constant drop here. So right now, bias is bearish. And in terms of where we stand, we haven't been at this level since 2018. And at this point, bias still remains to the downside. Now we could get a pullback into 2480 potentially, 2480 and then a drop. But if price does not break through the support, it can turn around. So that's something to watch out for, because if it holds above this support, it can go back and even go into top of this range that it has traded in for the last few days. But right now, bias does look bearish. The momentum is still to the downside. 2330 is the next target here. And then beyond that, we are looking at 2280. So bearish bias for S&P 500 here. Nasdaq, same thing here. We saw a big drop here. with the announcement on Sunday, Fed cutting rate, generally when the central banks cut rate, that is good for the stock market and bad for the currency. But as we can see here, stock market did not do so well. Even after, so when the Fed announced this interest rate cut, futures actually dropped and they had to halt the trading of the futures till the market opened the following day in order to support the market. And when the market opened, we saw a huge drop here. So momentum still is to the downside. We could get a pullback into 73.40, and then I would look for a further drop here. Now, watch out for intervention in the market. So right now, market is ripe for intervention from everybody. Essentially, all the central banks are in there trying to support the markets here. So that could push the market higher. But for now, though, bias is bearish. 94.30 would be a potential level for a pullback. And then I would look for a drop like that. So bearish bias here for Nasdaq. Now, again, keep in mind, price has not broken the support level here, which means we could see it go higher, and it could go, like I said, into the top of these candles here where it's been trading for the last few days. For now, though, bias is bearish, but watch out. If it doesn't go through, it can go back up. And then we have Dow Jones here, same thing. Price actually went through the support level here, even this one. Now it's pulling back. In terms of the pullback, it could pull back higher into 21,650 before it drops further. So bias here is bearish, and in terms of the targets, we are into levels from 2016, September of 2016. Next target is 19,650, and then 19,250. So bearish bias here for Dow Jones as well. But this one could pull back a little higher here. Even into 21,620. So watch out for that. Bias is bearish for now for Dow Jones. And then, as we can see here, DAX has also been one-way street here, moving to the downside. We had a negative close for the day, another drop in the market here. So bias is still bearish here, and price has gone all the way through our support levels, and I don't even have the charts. In this case, I would look for a retest of this 82.30 level, and then potentially into 8,000 for DAX. So bias is bearish for DAX. And then FTSE here, this one has also dropped off of the cliff here, just like all the others. Bias is still to the downside here. First target would be the base here, 48.30, and then I will look for 4600 as the next one here. So bearish bias for FTSE as well. And then last but not least, we have Nikkei here. Now, first pullback level will be 17,000, but it could pull back more. So it could pull back into 17,450 potentially, and then looking for further drop here. But expect markets to be volatile. I'm still looking, expecting them to be volatile here because of just the way investors are selling everything, and also with the central banks trying to support the markets. They are buying securities, which causes the markets to go up. So right now it's just been one big mess here. So in terms of our targets, let's take a look here. For Nikkei, we are looking at first target would be just the retest of 16,250, then 15,850, and then 15,550. Overall bias is to the downside for Nikkei as well. So at this point, I would say just to be careful here, a lot of interventions in the market, and market is doing stuff that we don't normally see. So the moves are not normal. And as a result, just expect volatility in the market. All right, so that's it for today. Have a wonderful trading day, and I will see you again tomorrow. Bye for now.